So the important thing with digital securities and securities tokens offerings, STOs, and really any kind of digital asset that's out there being offered, whether they call it an ICO, IDO, IEO, STO, digital security, securities token, tokenized security, or whatever they call it, or regular equity, or venture capital investment, or private partnership investment in a venture fund, whatever it is. Um, they're 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 either securities or they're not. We won't talk about non-securities for a while. That would be things like utilities or currencies or something like that. But generally, most of these offerings are securities. Some of the offerings were done in compliance with the laws in the United States and other countries. Others were just sort of, sold to the public. But what I'm talking about going forward is securities tokens, digital securities. A lot of people ask, should they invest in them? It's a really exciting hot area. How do I get a part of it? Well, it's important to note that although the technology and the idea of digital securities is really exciting, it doesn't mean that the digital securities themselves are going to be a great investment. In fact, a lot of reasons, most of them probably won't be. I'll just talk quickly about sort of what a stock is and stocks are the main types of securities that we're talking about. So in the United States, a security, and generally throughout the world, a security is some sort of tradable agreement. Okay, the first tradable agreement was in 1602. It was the Dutch East India Company, also known as VOC. Brilliant idea. Prior to this, if you had a shipping expedition, you needed to take your life savings and basically put it into this shipping expedition and hope it came back. And you either got kind of a 2 or 3 or 10x, or the ship is gone. You maybe never hear back. Nothing ever comes back. They got caught by pirates or killed or sunk or something like that. That's a tricky model. So to spread the risk around, some genius invented this idea of saying, well, why don't I put some money in and you put some money in and some other people put some money in, and then you pool that risk, and instead of getting one ship, you get many ships. And that was pretty revolutionary and very, very popular. And then the agreement that said you owned a piece of the shipping company, that could be traded with other people. So that made it even more powerful. And VOC became the largest company the world had ever seen because of that. Pretty much dominated the whole world. Did a lot of bad things. They had an army and, invaded and things like that. But from an economic standpoint, it's undeniable that its might was like nothing else we've ever seen. I mean, here's an example. 30 years later, basically, 35 years later, it was the size, adjusted for inflation in today's dollars, it was the size of Alibaba, Facebook, Apple, Microsoft, Google, Bank of America, Berkshire Hathaway, and Samsung, AT&T, all combined. $8 trillion. I mean, look at this list of companies: Tesla, McDonald's, Chevron, Visa, Walmart. Walmart's just a little speck here compared to VOC. Think about that. So that changed the world. That invention, that ability for us to take risk and spread it around, changed the world. Now we have it in every company, and many of the great fortunes that have been made are tied to stocks in some form or another. So stocks are a big deal, and they should be a part of the economy. Here, compared to bonds, bills, and inflation, stocks have beat inflation more consistently than pretty much anything over this very long period of time. Look at the catastrophic crash, the 1929 market crash. But you see these ups and downs. This is as we've talked about on some of these videos about asset allocation. You see this kind of up and down movement, that happens in the markets. But over time, it has been very, very good at building wealth, better than anything else. But that's the market as an overall package. Businesses overall, commerce, trade, entrepreneurship, new ideas, people solving problems for people providing products and services, goods and services to others. That's what the economy is all about. That's what wealth is all about. And that makes a lot of sense for digital assets. If we talk about STOs, if you can make this whole world of stocks work better, that's a really big deal. But it doesn't mean, as I said, that each individual securities token is going to be any good. Just as the early companies that traded on the VOC may or may not have been good. So the 2 points that I have to make: one, I think stocks and equities should absolutely be a part of any growth-oriented portfolio. growth oriented, meaning you want to grow your money over time, over 10 years or more, over a long period of time. You want to grow your money and you can afford to take risk. And you can afford that kind of fluctuation that you see in this sort of chart, which is sort of a less volatile and much longer version of sort of the crypto charts. That doesn't mean that crypto, by the way, is going to do this. It would be extraordinary if it did. We don't know. We don't know which crypto. Certainly in this process, you have a lot of things that fall away. And crypto is very, very different than securities. Securities have metrics that we understand the value based on what they earn. And in general, securities are based on the value of what the company is earning, both their gross earnings and their net earnings. And then other factors like what industry they're in, how valuable the name is, the company, the future prospects. But it's some sort of discounted, cash flow that the company has. Cryptocurrencies don't have that. It's a different kind of metric. So Bitcoin, for example, you would be comparing it to money. You say, is this a better form of money? Money has its own sort of metrics that it's based on, how usable, fungible, scarce, and so on. And those are kind of your major categories, along with real estate, which is pretty obvious. But really, you want to look at any digital asset and say, is it a security? If it is it a stock or something that looks like a stock? Those are general good categories of investment. Again, the specific investment might not be good, but stocks are a great investment overall. So when people say, all tokens are bad or all tokens are scams or something, I get it. Believe me, I understand. There was a lot of junk, especially around 2017. But tokens aren't a bad thing. Securities tokens aren't a bad thing. ICOs, IDOs, IEOs. There's two issues. One is, do they comply with the securities laws? And two, are they a stock? If they're stocks are great. Doesn't mean the company's great, though. That's a whole other thing. The company might still be weak, but at least the structure is right. Whereas if the structure's wrong, as you had with a lot of these ICOs, then it doesn't matter if the company's great. You still won't make any money from it. So stocks are a proven long-term vehicle to help companies share that risk among investors and help them build wealth over time if the company does well. It's a very, very good model. And if you can make stocks work better, that's really exciting. So if there's a few companies that are at the forefront of that, who are working on the protocol layers and other things to make this whole reality of digital tokens work, yeah, you maybe invest in those. If you're a risk type investor, typically that would be a venture capital investment or something like that. That might make sense. Otherwise, you only have a little bit of a premium or something that you might get because it's digitized. It's really better to just sort of ignore the fact that they're digital securities and just have an asset allocation and investment plan that considers stocks. What percentage of stocks should you have in your asset allocation? Is it 30%? Is it 70%? And of those stocks, what kind of stocks should you have? Should you have Microsoft, Facebook, Google, IBM, or should you have, more speculative, angel investment type of thing? Typically, most of your money should be in publicly traded, large cap and small cap stocks that are publicly traded. Small caps that are publicly traded are huge caps generally compared to a lot of startups. Although there's a lot more startups in the $1 billion range. But anyway, those are all equities, and you'd want some smaller percentage of your equity portion. Again, for a typical growth portfolio, you want a smaller piece to be in those more risky type of things, which is what most securities tokens will be. However, when you have somebody like a Facebook coming out talking about digital currency, who knows? Apple or some other major company could have a securities token. So you look at your overall asset allocation first, what percentage is going to be in stocks, and then of that, what percentage is going to be in sort of more risky stocks or non-publicly traded or whatever. And nowhere in there is really a consideration of whether it's digital or not. That doesn't matter much. Asset allocation first. Stocks are great. Just make sure it's a good stock. And that's a lot easier said than done. When I say that stocks are great, they're a great way to build money and build wealth over time, don't discount that in thinking that it's some sort of sure thing. It absolutely is not. You can lose all your money in stocks, and particularly if you're talking about things like securities tokens and these other things, those are most likely going to be even higher risk. So the stock market is risky. It's not gambling. It's a mistake to call the stock market gambling. It is not gambling. Gambling doesn't happen for a reason. It's based on chance, typically, sometimes skill, but usually chance. Whereas the stock market happens for reasons. It happens because of the cycles of the economy, because of what buyers and sellers want, supply and demand, and generally over time it's driven by the earnings of the company. If you have a really, really healthy gross and net earnings that are consistently increasing over year after year after year, your stock is going to be worth a lot. It doesn't matter if you're public or private. That's just the name of the game. And almost nothing can stop that. If you consistently grow revenues, both net and gross, your company's going to be worth more in almost all cases. And you can participate that if you invest. You can participate in some of these great companies, and that's been a great way to historically build wealth over time.